Welcome back. Financial Issues. I'm Dan Celia, 866-300-9298, 866-300-9298. If you've got a financial question, a comment, you want to give us a call, that's what we're here. We've got one line open, 866-300-9298. All the markets are scheduled to open down. It looks like oil is moving downward, or at least it was early this morning. I should take a look. It still is. It is moving downward. It's at 102.99. So basically, it's at 103. So pretty high level, but it's down 32 cents right now, or 1/3%. Gold is down again this morning. It's at 13.16. So well off its highs of earlier in the week, but it's down 460. Silver is up, or down too. I'm sorry. It is down 21.71 for silver. Natural gas, 607. I'm so glad, I was disappointed because my electric bill was going up so high. Now I get to see my gas bill go up. And, I want them to go up together, of course. I'm kidding. Oh, my word. 6.07, but at least we're through the bulk of the cold weather here in the Philadelphia area, I hope. But anyway, natural gas continues to go up, 607. Well, so if you own Chesapeake Gas, if you own Cabot gas, I'm just thinking of a couple. Some of the pipeline companies and so on, they should feel the effects of this in the upcoming weeks. All the commodities, food commodities, are down. All of them are down. Anyway, let's get to the phones. Let me go to Chris. Chris calling us from Virginia. Hi, Chris.
Hi, Dan. Thanks for taking my call.
Sure thing.
I have hopefully an easy question for you.
Okay.
We're pretty comfortable with most of our investments, but we just recently came across your show, and mostly we're in like 401ks and Roths with like CDs or principal preservation, which we're pretty happy with. But we also have some liquid funds with UBS, and we're not so sure, and we're in the process of getting moved to Schwab and following your recommendations. There are a couple funds in there that, well, one of them, Schwab does not sell, but they will take it. I mean, they don't buy. They'll take it, and then they'll sell it when the time is right. And we're just wondering about these two funds, if they should be liquidated right now or if there should be like a sell order number. And they are the Lord Abbett Short Duration Income, which is LALDX, and the Western Asset Mortgage-Backed Securities, which is SGVAX.
And I would suspect that both of them, the mortgage-backed securities might have done okay last year, but I suspect that the Lord Abbett didn't. I mean, it might have held its own because it is short-term.
Right.
But, I suspect it didn't. That neither one of those set the world on fire last year.
Right.
But anyway, here's the thing. They would not meet, neither one of those funds, I know them both, neither one of them would meet my biblical screens, as most mutual funds don't. But sometimes a lot of bond funds do. They would not be two of them that would. Okay. So I would not have a problem selling those, and then reinvesting. But here's what I'd warn you about, Chris. You want to make sure that what they're going to charge you. Are you with UBS?
Right now, we're going to get out of there.
Okay.
Yeah.
So you don't want to sell it at UBS. So you want to transfer it over in kind to those funds that you have. You want to transfer those over to your Schwab account and then sell them. Because if you do that, it's only going to cost you $9.95. If you do it at UBS, it's going to cost you more than that.
Gotcha. Okay, so there's no problem with going ahead and doing it now.
No, I don't think so. I mean, look, the short-term bond fund. Again, I'm analyzing right now in great detail. I thought I was going to have something for the middle of the week this week, but not happening in reference to bond funds. Because, I feel like I need to really consider starting when to figure out when is going to be the time to move back into some short-term bond funds. So I'm doing that now. But right now, here's the thing. I mean, I feel like it's not going to take much for them to start going back down again. And I don't foresee any raise in interest rates by the Fed anytime soon. So I think we're okay there. But if inflation begins to set in, and right now I'm a little baffled, along with everybody else, as to why inflation is not getting a little bit more heated up. So I suspect we could see that by the middle of the year. That also is going to impact bond funds. So I don't know. I would like to see you just move out of those now, just be done with it. When not right now, as I said, not until you get it transferred over.
Right. That should only take a few days, so
yeah,
and we can sell them right away.
Yep.
Well, thank you so much. I really appreciate this. That's exactly what we needed.
You're welcome, Chris. Thank you for tuning in to us on a regular basis, and thanks for your support. Sure appreciate it. Let me go to David. David calling us from Pennsylvania. Hey, David.
Yeah, good morning, Dan.
Good morning.
Yes, I've recently taken more responsibility managing my portfolio using your advice.
Mm-hmm.
I have a question about, with a very small portion of my portfolio, doing some stock trading using Investors Daily Business.
Mm-hmm.
And I assume you're familiar with that. Just get
Yes.
your insight and advice.
Yeah. I mean, I think you mean my comments on Investors Business Daily?
Exactly. Just
Yeah.
using their
No.
system.
Yeah, I'm fine with that platform. I think that's a fine platform. I don't have any issues with them at all. Most of the major platforms like them, like Scottrade, like Schwab, as somebody just mentioned, E-Trade, and all those. I feel fine about. Now the only thing difference between a Scottrade and a Investors Business Daily is that you're going to get a lot more recommendations from Investors Business Daily. And if you're okay getting inundated with that and getting all that, and that's something that you want to track or follow, then that's fine. But that's one major difference. I mean, they will be considering all those sending you these recommendations.
Yeah, I'm just curious about your thoughts. It seems to me a lot of it's about they're reading the market, the direction of the market, and essentially getting into slightly smaller, higher risky stocks, but also getting out based on their signals.
Mm-hmm. Yeah, I'm not a fan of any of that. I'm not a fan of their some of their recommendations. I've seen some of their recommendations that match mine, and same company, same stock, but I'm not a real fan of their style there and what they're doing. And I can't speak about their recommendations because the vast majority of them aren't biblically responsible. So I'm not even tracking most of them. So I can't really say, well, that's a great company, that's a good company. I'm some of them I know, most of them I know off the top of my head are not biblically responsible, or are maybe I know a lot more of them than I think I do all the time, every time I hear one. But anyway, so they're paying attention to technicals. So technicals are a great way. We live in a market of technicals. And my argument has been, as I talk about all the time when I speak at investment conferences, is the technicals are important to making any decision about a particular company. I use the technicals every weekend when I decide my pick list, my stock picks. Obviously I have a screening in all the technicals before I make a decision. The problem is it's only about 20%, 30% of my decision-making process. And what I talk about on a regular basis is, and this is more information than you need, but what I talk about on a regular basis when I speak at investment conferences, we have totally lost the art of art, the art part. The part of, the years ago, I mean, there's still some old timers like myself still doing it that, keep their ear to the street on some very specific numbers. We've lost that. Everybody's got their nose buried in textbooks and technicals. And so I am not a fan of that. I'm not saying I'm not a fan of, or I don't believe in those technicals. I do, and they should enter into it. But I also believe that we've got to keep our ear to the street, and we should know the company and know a whole lot of other things about the company and the momentum and the markets in a macro sense. I'm a behavioral technician more than I am anything. So I believe deeply in watching closely, and I always have been, in the behavior of a particular company and the management of that company, as well as the behavior of the type of consumers that company is trying to appeal to. And I think, I gain a couple things by paying attention to that. I get a much broader sense about the overall economy, because I think you do that when you study those kinds of things. And I think you get a better insight as to where the company is headed by doing that. So I don't expect anybody to do things the way I do. I do things counter or very different than everybody in the country, it seems. So, they're focused very much on technicals and technical milestones, technical points in which this has reached a technical place where it's time to sell one way or another, or a technical point. If I had done that with my list, I'm not talking about their list, but if I had done it with my list, then there'd be a whole lot more bad buys on my list than there would be good. So I know that's more than you bargained for on an answer, but I thought it would be edifying for the rest of the audience. So hopefully that helps.
Thank you. I very much did.
All right, David. Thank you for your call. I sure appreciate it. 866-300-9298. Let me go to George. George calling us from Ohio. Hey, George.
Hi, Dan. Nice to talk to you.
Thank you.
First-time caller.
Oh, great. Thank you.
I agree with you on the recovery. I don't see a recovery. I do some of the grocery shopping. I see prices in the stores. Either they're making the packages smaller or they're raising the prices.
Right.
My heat was propane, and 6 weeks ago I filled my tank up at $2.39 a gallon. Now it's about $4
Wow.
a gallon. And in Ohio, they even tax it. They put a state sales tax, which is ridiculous.
Oh.
It's crazy. But my question was the long-term forecast on the stock market this year. Mm-hmm. I just see a big decline myself.
Yeah,
I don't think we can, go the way we are. And, supposedly we live in a free market society, but the Fed Reserve's got to prop up the stock market.
Yes. Yeah, you know what, George? I had a conference call yesterday with my partners, and when I have those conference calls, I tend to be a little bit more frank and a little bit more open of some of my opinions. And without going into all the detail, I said to those that were participating in the conference call, which was quite a few hundred. I was surprised. It was a big conference call. And, I said, look, this is not going to be last year's market. I believe this is going to be the beginning of the downturn. And I cited some of the buying and selling that is going on among corporate executives and among corporations, among high net worth people. Now, I subscribe to services. It costs this ministry about I think I said on my conference call about $17,000, $18,000. It's more than that because everything went up. So it's probably closer to $20,000 a year in certain services, so that I don't have to fish around and go the long way to get all the reporting I need, some of the SEC data and some of the detailed financials. But just to mention a couple things, but I see every week. For people listening that don't understand this, if you are a CEO of a company, you're making a couple $1 million a year, you can't just sell your stock. You have to file with the SEC before you sell your stock. You can't just buy a bunch of your stock. You've got to file with the SEC. Corporations have to file when they make a decision, when the board makes a decision to have a buyback or a sellout. All that's got to be filed. It's public information. It's not where the average person can get a hold of it, but I get it in mass as they're filed. I get them so I can look through. Now, I have to sift out the companies that, I don't care about, but I have a screening process for that to stick to my list that's on my website. So I'm looking at all of that, but I do get a look. I do get a glimpse of what they are thinking about the economy. So it's not just all my opinion. All that information helps form my opinions. But nevertheless, when you see that, when you look at it, it's very different. It's very different this February than it was last February. So I think that's an indication. Look, we cannot, we as a country, I'm talking about now, we cannot continue on this road without severe consequence. I said yesterday on my conference call, I try hard not to be an alarmist, and I try hard to be an optimist to a certain extent, because I've always said, as I speak and talk about the dark days ahead for America that are on the horizon, as I talk about those things, I also talk about here's how we can fix it, and that I'm optimistic. I'm optimistic because I'm a capitalist and I believe in the free market economy. And I believe that $1 trillion or so, when we have over $3 trillion on the sidelines right now, well over $3 trillion on the sidelines, $1 trillion of that coming back in to an economy like America can change things dramatically. So can we do that? Yes, but we are so close right now, closer than we've ever been to the point of no return, because there will be a point in which that $1 trillion, that corporate confidence, even if there were to be a will in Washington to fix things, it isn't going to matter. And we're close to that point. So, George, I agree with you 100%. I appreciate you making the point. That's a little bit of my opinion. And, folks, if you want to join those conference calls, man, I hope, and maybe some people will call in, or people that were on that conference call can comment on how much they appreciate it. I do get emails about it, but you can go to the website, financialissues.org.